morning, traders. Welcome to the TMT Stock Market Strategy video for Thursday, June 9th. Another rally in the cards every single day since June has started. Actually, before that, we've got pretty much a rally every single day, pushing it into new highs yet again. The algos are going crazy. The algos are running wild, and to say the least, all based on no volume. And volume is pretty much a key component. I know a lot of market participants and technicians fail to say that volume doesn't matter anymore, but it does matter. It's very important, and there's no volume. So what we're dealing with here is basically a runaway market at the moment going into a major risk event, which obviously everybody imagines that the Federal Reserve will not raise rates come June, which is next week, I believe, and that's why they're buying the market up, going into that meeting, and then obviously probably going into the July meeting. They also think that it's probably a 40. I think Fed Fund futures are saying it's a 40% chance that they're going to raise in July. So trying to front run the Fed, and markets just continue to go with no volume. It's dangerous out there, guys. Be very, very careful if you're trading. If you don't know what you're doing, take a step back and really get yourself a trading plan, because it's critical. But we do have some big cracks, a lot of cracks in the wall, and basically our stock market foundation. And we're looking to see if this market's going to sell off. I do think the bigger move, and I mentioned this before, is to the downside in a big way. I'm looking for clues right now. I'm showing you a few. Extreme complacency in the volatility. Extreme complacency. You see that? We just broke down to this area here. Of course, we can go down to this area, but right into these bands, a very, very low volatility. But what happens to that becomes the big challenge, right? When you see these low volatility months, what happens? And you get that big move lower. Same thing, a brief little spot here, move lower. Same here, like we're getting right now, and a possible move lower. Again, just this is something that I'm showing you. But when you get to these areas, got to be very, very careful. Because the markets, what's happening is the VIX did not go anywhere today. It didn't sell off. Market, as I believe the ES was up 8 handles, and the VIX did not do anything. Heavily shorted by the large speculators, such as the mutual funds, hedge funds. That's the dumb money, and the producers that need the VIX for hedge is the smart money. You can see that here. Bollinger Bands are tightening. Be careful. We caught the bottom, and now we're back up again. Can we go back down again tomorrow? Sure, absolutely. But be careful out there. And when you go across the board, and when you say, "Well, Mark, why do you think that?" Well, you got just about every asset class is just trading higher. There's no correlation, inverse correlate anymore. You got gold trading higher because of the safe haven trade. You have crude oil trading higher just because it's pure speculative play. You have the stock market trading higher. All right, bonds are even trading high, and I showed you bonds the other day, saying, "Watch, God forbid, if bonds take out the 20-year trend line high, and holds, I think you're gonna have a big move from equities into bonds." And also, I looked at the French CAC, the FTSE, London FTSE, and the German DAX. They're all in symmetrical triangles, not even going anywhere near where we are, and we have twice as many problems, just as much problems as we do with around the world, if not greater, okay, not being shown. So a lot of flags out there. Be very, very careful. You can see that again with the VIX, and also we have positive divergence. You can see here that we're moving high where price was moving lower, and again making that higher high from this previous high in the VIX and the RSI. Just want to show that to you here. So we didn't quite cross over, but we're going to probably do so tomorrow in the VIX. The VIX has a decent day. So something to think about, just to keep in mind. Now let's go into the indexes. We took out the head, so tomorrow, come Friday, I'm going to take the head and shoulders off. And like again, what I mentioned, if everybody sees the pattern, it's not going to work, or barely does work. And sure enough, this did not work out. Okay, and we did not get short because you need to close below the neckline. And since we're right below the 200, that would have been the ideal move, but it didn't happen. So we're going to negate this one and take this off. Okay, next. I want to show you 60-minute, and 60-minute has negative divergence. You can see the MACD actually crossed over to the downside and is pointing lower on a 60-minute. Same thing with RSI. So while price is moving higher, our oscillators are telling us that we have some negative divergence here to use caution. and next will be the IWM. And again, the Russell just literally just ripping to the upside for whatever reason. It's just up pretty much for the last almost 2 weeks straight, maybe a day or two of a pause, but literally straight up. Something, again, erratic behavior from the algos, and I wish somebody would do something about it. It's just terrible that you have these computer systems just running all day and just running amok with the whole stock market. I mean, it's tough. That's why I said don't be fading anything. Do not fade anything unless it's a gap trade or something like you're going to use it into your analysis. All right, transports. You can see here again, same thing. Had a decent day. The rails did good today. We had follow through outside day from the previous day. So let's see if it challenges this double top here that we're going up to. All right, and if that happens, then we'll probably make new highs, or we'll challenge the ES high of 2136. And let's take lastly is the Qs. You can see here, Qs did absolutely nothing. Was the weakest one today, and it's still in the indecisive. It's sitting on this trend line area, which was resistance. So something to keep an eye on, guys. And again, indicators are rolling over. I showed you some few. There are plenty more to show you. Just don't have the time in the video. So use caution. If you're holding anything, be very careful. You might want to hedge your bet. Volatility is cheap, so insurance is cheap. Just give you a heads up. That's all. Have a great day, and we'll speak to you tomorrow. Take care, guys.